UR Energy. New York Stock Exchange listed UR Energy is a leading North American uranium mining company with a strong track record of producing low-cost uranium. UR Energy is an in-situ uranium recovery specialist. You'll learn about that in a moment, and has previously produced and packaged approximately 2.7 million pounds of U3O8 from Lost Creek in South Central Wyoming, and is in the process of obtaining remaining authorizations to expand Lost Creek. At the company's second in-situ recovery uranium facility at Shirley Basin in Wyoming, UR Energy has all major permits and authorization in place to begin construction. Now, John just told me that Wyoming is approximately the size of Great Britain. I wasn't surprised, but it is very big. Welcome, John.
Hey, thank you for having me. I appreciate the opportunity to tell our story.
John, it's fantastic. We're delighted to have you on board. And take it away. Tell us the company story.
No, sounds good. Glad to jump in and tell you a little bit about the company. And I'm located right now in Casper, Wyoming, which is where our operations headquarters is at. The mine site is a couple of hours west of town. And I'll just pull up a presentation here for me. And we always like to talk about Lost Creek first because it is our operating site, and it's been up and running for over 9 years now. And as you indicated, we've produced nearly 3 million pounds of uranium since that time. So it's been a great producer. We've had some great profitable quarters from that mine, and really is our flagship. And I'll talk about our second flagship as well. The obligatory disclaimer, I might make some forward-looking comments during the presentation. But we have recently made a decision to ramp up production at Lost Creek. We had allowed production to decline back starting in 2020 because market conditions were very poor. But the price of uranium has begun to come around due to geopolitics and due to pressures from additional demand from the nuclear fuel cycle. So we're excited to announce that. And we have drillers out there right now installing wells at the in-situ mine. We've been doing a lot of hiring, bringing people on, doing training. And within a few weeks now, we will have meaningful flow running through the processing plant and producing pounds to feed into contracts. We've got a great resource at Lost Creek, 11.9 million pounds of measured and indicated resources, and an additional 6 million pounds of inferred, and a lot of opportunity to grow that resource because there are a lot of areas, and I'll show a map a little bit later, where there is, we've not done a lot of exploration in some areas of the property. So we believe we've got a good opportunity there. Certainly every time we have gone out and explored the property, we find more pounds, and our average discovery cost is about 50 cents a pound. So we've been producing for quite some time. We still have a mine life of 14 years left at that property. The license that we have for the well field allows us to produce 1.2 million pounds per year. The processing plant that is fully constructed is licensed at 2.2 million pounds per year. And the delta between the 1.2 from the mine and the 2.2 from the processing plant allows us to toll process from other facilities, whether that be our own facilities in the region or from competitors in the region. And that brings me to our next flagship property. It's also in Wyoming and an in-situ facility, and that's called Shirley Basin. It's just south of where I'm sitting right now. And we have all the major permits in hand for that operation. We have not made a decision yet to ramp up production, but when we do, we believe we can build it out in a time period of about 18 to 24 months and get it ramped up as well during that time period. So fairly short amount of time to be able to ramp it up. And the capital expenditure to build it out, we're only looking at about $30 to $35 million to build out that facility and to ramp it up. We have a good resource there of 8.8 million pounds of measured and indicated resources. I would note there that this is a project that's been heavily drilled, and we have all of the historic data. We don't need to do any more exploration or development drilling here. We can go straight away into production once we decide to pull the trigger and produce there. But backing away from our two flagship properties to talk a little bit more about the company, we're proud to announce that we've sold some of our inventory to the Department of Energy very recently. We got a very good sales price on that, exceeding $64 a pound. So just a couple of weeks ago, we got our paycheck from the government, $6.4 million So we were very glad to have that brought in. We still have a remaining inventory of 224,000 pounds. We also have been signing some long-term sales contracts with large utilities and nuclear companies globally. And we've been able to layer in sales contracts of 600,000 pounds per year. It starts off at 200,000 pounds of production this year, but it goes up to 600,000 pounds of production each year thereafter. We are an in-situ mining company. And what that means is we don't use conventional methodologies to recover the ore. Instead, we install water wells into the ore body, and we inject water, baking soda, and oxygen. And that dissolves the uranium, and we simply pump it to the surface from an adjacent well. So the disturbance from that type of mining is very small. And when we get done mining, we will return the land back to its original use, and you won't even be able to tell we were there. But moving away from the company just for a bit, we'll talk a little bit about the nuclear investing thesis. Certainly, there's a lot going on right now globally in that regard. But really, things got kicked off a few years ago when people began to realize that if we're going to go carbon free, renewables are fantastic, but we really need reliable base load power that can be on when the wind doesn't blow and when the sun goes down. And so that really began to foster a lot more interest in the nuclear space. And a lot of investment companies started to jump in as that came about. The World Nuclear Association is projecting significant continued growth in the industry. It's important to note that that study that the World Nuclear Association did was pre-invasion of Ukraine. Since the invasion of Ukraine, there are a lot of European countries that are saying, hey, we're not going to be reliant on Russian natural gas anymore. We've got to find a different solution. And a lot of countries now are turning toward nuclear. So we believe when the WNA does their next study, which will be September of next year, that the results are going to be even more favorable, and we're going to see more year-over-year growth at an expanding rate. We're also looking at additional uses of nuclear power through small modular reactors and also through hydrogen production, and those should not be ignored in the midterm to long term. A number of countries around the world, as I indicated, are moving toward nuclear. China is the gorilla in the room. They've committed to building out 150 reactors over the next 15 years. That's a massive build out. But not just there. England is looking toward building out. France, Japan, bringing reactors back online and potentially expanding the fleet. Finland, even here in the US, we're looking at some growth within the nuclear industry. A Southern company has two reactors, new reactors that they're going to be bringing on this year. There's just continued acceptance of nuclear power globally, and including here in the US. In the US, a lot of people don't realize we have the largest reactor fleet in the world. We still have 93 reactors up and running. We're seeing considerable support of those reactors from the US government through recent legislation designed to keep those reactors up and running and expanding their lifetime. And we're also seeing a lot of support from both Republicans and Democrats who fight on most everything. But when it comes to nuclear power, there's strong support. And there's legislation right now being considered in Congress designed to cut off the supply of material that's still coming in from Russia into the US. We're seeing a lot of interest from financial players like MMCap and other hedge funds. ETFs are being formed to invest in the industry. But the real game changer from the financial point of view was when Sprott developed the Physical Uranium Trust in July of 2021. Since they've developed that trust, they now have greater than 60 million pounds of physical uranium inventory that they've acquired. That is a one-way trust, which means they can buy those pounds, but they cannot put them back on the market. It's effectively a buy and hold mechanism. And when they're in the market, we feel it. We see the pressure on the price. But we can't talk about this without talking about geopolitics, because Russia is by far the largest refiner of uranium in the world. They don't mine very much, but they do refine. And because of that, the world has become very dependent on Russia for its supply of nuclear fuel, conversion and enrichment services. If that supply were to get cut off, which I suspect that it will over time, it's going to be very difficult for the Western world to replace that supply simply because we don't have the physical infrastructure to be able to do that. So right now, countries around the world are looking at ways to replace that supply in case it gets cut off. The same is true from uranium supply. A lot of that is coming now out of Kazakhstan, which is an ally of Russia. They do appear to look like they're trying to distance themselves from Russia, but it's not clear that they will be able to overcome Russia's influence when it comes to uranium production and export. And if that uranium supply from Kazakhstan does get cut off, then it's going to have an immediate and significant impact on uranium prices very quickly. Here in the US, uranium production has declined to effectively zero because it's been very hard for us to compete with Russian and Kazakh state-owned suppliers of uranium. But that's where our company comes into the story. Our Lost Creek property is built out. It's producing now, and we're ramping it up to a greater production level. We have a great resource in the ground and a lot of area, which is about 35,000 acres that we can go in and explore. And we're optimistic we can find more pounds there. The average recovery rate in the in-situ mining technique is only about 60 to 80%. But at Lost Creek, our average recovery rate over 9 years is at 90% recovery. So we've exceeded the norm, and that has led to some fantastic economics on the property. Economies of scale are important. In 2015, we reached our maximum production level of nearly 800,000 pounds on a per annum basis. And our production cost, C1 cash cost then, was a little over $16 a pound. That year, the all-in mine site cost was a little over 33. We're not going to be able to get back quite to those rates because of inflation, but we believe we can get very close. And to put that into context, the spot price today is right around $51 a pound. The long-term price is about $53 a pound. So at Shirley Basin, we believe it's going to be a little bit cheaper to mine there than at Lost Creek because the ore body is shallower and a lot of the infrastructure is built out. And we own a lot of that land. And so we're not paying royalties much on that or are encumbered by any other expenses there on that property. That is a brownfield property that was a former in-situ mine. Probably the first in-situ mine in the world for uranium was located at that site back in 1963. So we're underway with a ramp up right now, ongoing drilling program in Header House 2-4 and 2-5, which are our next production areas. We've been hiring like crazy. We've gone from 9 people at the mine site in October of last year. Today, we've got 41 people. We still need to hire about 15. We've got an advanced purchasing program. We know that some equipment and materials are hard to get. So for over a year now, we've been well ahead of the curve, and we don't see that supply chain is going to interfere with us as we ramp up production. ESG is an important part of the nuclear story. And I won't go through the entire, all the points on ESG in the interest of time, but I would point out that if you look at the CO2 emissions that will be averted by burning the uranium from our Lost Creek and Shirley Basin project, compared to that would be burned at a coal-fired power plant, we're going to offset more than 300 million metric tons of CO2. That's the equivalent of taking 67 million cars off the road for 1 year. And we're very proud of that. It's an important part of our ESG story. UR Energy is well recognized in our industry here in the US as being a leader when it comes to research and development, technology evolution. We've had a number of great successes over the years, and we're followed on a number of projects by our peers. They mimic what we do. And late last year, we announced 2 more R&D programs. One of them is focused at a new well casing technology. We've completed phase 1 testing on that, and we're moving on to phase 2 testing this spring, and we'll have more to report on that. We're also working on a methodology to reduce water consumption through advanced filtration and treatment, and we hope to have more to report on that in the coming months. But taking a look at our market position, we're in a great place right now. Our last public disclosure, we had 37 million in cash in the bank. We just a few days ago, we closed an additional equity raise where we are grossing $46 million. And we also brought in a little over $6 million from that sale to the Department of Energy. So we are incredibly well cashed up right now. And that was quite intentional. We raised money when we didn't need it because we were able to get much better terms. And that allows us to move into the ramp up phase well cashed up. Otherwise, we would have started to run a little bit low on cash. It'll also help us as we look at M&A. We would really like to grow the company and looking for opportunities in that regard. And we wanted to enter that very well cashed up in a strong position. So market cap today is around $290 million. Fully diluted, we have about 242 million shares outstanding as of the 30th of September. That number is going to increase as we roll in the numbers from the equity raise that we just increased. But we've got great analyst coverage in the US and in Canada. And kind of the points to take away from the conversation here is we are extremely well cashed up. We have a proven project in Lost Creek, working toward ramping that up. We've got long-term contracts, revenue locked into place with that 600,000 pound a year contract book for the next 6 years. So great story, a great time to be jumping in. And with that, I'll pause and be glad to answer any questions that the listeners have.
Fantastic. John, my goodness, you guys have been busy.
We have been incredibly busy. Once we made that decision to ramp up in December, it was all hands on deck. We immediately began to increase the level of hiring. And it's been a very busy time. And with the equity raise as well, that's kept us very busy.
Yeah, the equity raise was icing on the cake in terms of busyness.
Yeah, absolutely. It takes a lot of time to accomplish those. Once you pull the trigger, it happens very quickly, but it takes a lot of lawyers, a lot of bankers, a lot of technical people, a lot of due diligence to put those to bed.
You must have been very pleased with a $46 million raise. Tell us how it went.
Yeah, it went very smoothly. Cantor was the lead banker on the deal. We had a 15% overage that was completely allotted. We could have easily raised a lot more. In fact, we had some large investors ask us if they could do more. And we held back and said, no, 46 million is what we're targeting. That's where we're going to close the book on that. But it was easy to go out and get that money for us. I think people understand that when it comes to uranium mining, we have some of the best assets in the U.S. and certainly can compete with just about anybody globally as well. So making that raise was easy. We had a very reasonable discount on the share price on the raise. It was a 4% discount to VWAP. Which is fantastic. We were pleased with that. We threw in a half a warrant as well with a 3-year term on that and at $1.50. And so today our share price, we're trading at $1.08, $1.09, somewhere right in there. So all in all, we were very happy with how it turned out.
And where do you see that $46 million being spent, John?
Oh, we've got some good uses for it. It'll be dedicated toward ramp up initially. We already had a good cash position to see us a long ways through ramp up, but we were getting to the point where we were a little uncomfortable that we were going to get a little low on cash during ramp up before we started selling into those contracts and had revenue. And as you well know, the time to raise money is when you have money. If you wait until you're getting low on cash, the bankers know that, and you don't get very good rates. So our cash burn rate right now is fairly high, because we're aggressively pursuing the ramp up of mining. And so we wanted to go ahead and grab that money right now instead of waiting until later when we wouldn't get as good a rate. But again, we're looking at M&A. For a long time, we've been a relatively small but profitable producer with very good quality assets, but we would like to grow the company. We think nuclear power is got a very bright future. And we want to position the company to be able to realize that higher profit margins, higher production levels through not only exploration, but through M&A. And we believe that the M&A activities we saw in 2021, 22 will continue into 23. And we're hopeful that there will be some good quality assets that we can bring in using some of that cash we raised. And I guess I would comment there too, for those who are listening in. Over the years, we've been very reluctant to jump into acquisition because a lot of the assets that have been for sale have not been of the quality that we've been after. So we're going to continue to be very disciplined and only make acquisition when it's a quality asset that we believe we can bring into production in the near term and be profitable. If it doesn't tick those boxes, then we're not interested in making acquisitions. So we're going to continue to be disciplined in that regard.
So you think the story over the next few years might be one of consolidation in the uranium industry?
Yeah, I think that we're going to continue to see that, especially this year. I think as the price continues, the price of uranium continues to march upward, ultimately we're going to see a cessation on consolidation as people really have got the playing field laid out. They've got the assets they want, and they move into profitable production. But I think 23, we're going to continue to see consolidation as the price continues to march upward.
You've raised that 46 million with ease. Does that indicate that the uranium market is back, that investors are confident, and that the super cycle that has been regularly talked about is either imminent or has actually begun?
Yeah, I think so. I mean, I can speak about that on the micro and the macro. From the micro, we've got quality assets. We're a very well-known entity in the uranium space, very low cost of production, very high recovery rates. So in that regard, we're one of the prettiest girls at the dance. We like to joke about that. So I think from that perspective, that made it easy to go out and get investment. But from the macro, yeah, there's so many reactors being built around the world. Demand is increasing with Russia's invasion of Ukraine. That has really caused nations around the world to look at other supplies of energy and come back to the nuclear story. Small modular reactors, I think, are going to become an increasingly important part of the story as well, as people look to build out smaller reactors that are more nimble, lower cost of capital.
And
I don't think we're going to see
in England, John. That's what's proposed here.
Yeah, absolutely. And not very far to my west here, Bill Gates has a company called TerraPower, and they've decided to build a reactor in Kimmerer, Wyoming, which is a very small town. It's got a coal-fired power plant. They're shutting down the coal-fired portion, but they're going to replace the coal-fired part with a nuclear power plant, but keep all of the infrastructure on the downhill side of that, so they reduce costs. So those are being looked at seriously around the world. And I don't think we see a tremendous demand for uranium in the next year or two or three. But as we start to look out 4, 5, 6 years from now, I think we're going to see hundreds, potentially even thousands of small modular reactors being built globally. And hopefully they can get that engineering perfected and keep those costs very low and add some meaningful carbon-free energy in that regard. But it's a great time to be in the space.
It sounds a bit facetious, but it's a serious thing. If Bill Gates, who, let's face it, is intent on saving the world, he's intent on saving the world with nuclear modular reactors.
Yeah, that's right. If he's got if he's leaning into this, he's supporting it with his pocketbook, with his
saving the world.
Lobbying ability. It's serious. He doesn't just take things up on a whim.
No, he's a very serious individual. Okay, Lost Creek. Tell me what's happening with Lost Creek mine in the coming years. What's the production schedule there?
So as we build out and we turn on flow, we'll be turning on additional flow here within a few weeks as we start up Header House 2, 4. And we're nearly ready to do that. We'll bring several hundred gallons a minute of processing fluid into the plant where we recover it. We do have the capacity at that plant to do everything we need to do. We don't toll process with anybody else. We'll take those pounds, recover them, do the chemical precipitation and the drying, and produce Yellowcake that we sell to the conversion facility. But this year, as we ramp up, our objective is to produce between 200 and 300,000 pounds of uranium this year, because that's all the contracts call for. So we'll match production with the contract demand. Next year, that demand goes up to 600,000 pounds. So by the end of this year, it's our objective to be producing at a rate of 600 to 800,000 pounds on a per annum basis. And we'll hold it there, maybe produce a little bit of extra to sell into the spot market and build inventory. But that's our objective for production here in the next 1 to 2 years.
Okay, final question. You mentioned refining in Russia, that an awful lot of the refining takes place in Russia. So do you guys actually refine your own Yellowcake, your own 308?
Yeah, we take it all the way through Yellowcake. Here in the U.S., we send our product to a company called Converdyne in Metropolis, Illinois, and they continue the conversion process there. But yeah, we produce Yellowcake. We compete directly with Kazakh production. And more indirectly, we compete with the Russians as they sell enriched uranium components.
Is it a business there, or is it too capital intensive to actually set up refining facilities? It's slightly a naive question, I suspect.
Yeah, I would love to jump into conversion, but it would take hundreds of millions, if not in the billions. And the enrichment is the same way. It would take billions of dollars to jump into those sectors. So right now, we're very happy as uranium miners using the in-situ technology, and that's where we plan to stay for now.
Again, it's me sounding like a daft boy, but someone's going to have to
Yeah.
at a policy level, don't you think?
No, it absolutely is going to have to happen. I think we're going to see first some expansion of existing capacity with companies like Converdyne on the conversion side and Urenco on the enrichment side. But ultimately, that's probably not going to be enough. There needs to be new build, not just in the US, but in Europe and the Western world to replace that Russian supply. It has to happen. And it likely will only happen with some government assistance because Russian material is so cheap. It's subsidized by their government. So if we're going to compete in the West, we're going to have some help from the government to be able to do that.
Oh, John, that was a fantastic half an hour well spent. Thank you so much for joining us. It was so interesting, and we have learned so much. Thank you so much for sparing the time with us.
Oh, thank you. It was good to talk with you.